Time now, though, for the markets with Leighton. And until this cold air moved in, Leighton, Monday's crop report was the big talk in the ag world.
A little surprise in those new numbers for one commodity in particular. In our headlines this week, the U.S. corn crop gets a bit smaller, on paper anyway. U.S. cotton numbers are basically unchanged from a month ago. While in the beef sector, feeder cattle producers are urged to develop some risk management strategies now. Delta Farm Press reports records are still expected to be broken for both corn and soybeans once the U.S. harvest for 2014 is tallied up. But that recent November 10th monthly number from the USDA did reduce corn production somewhat from October. I talked to Extension Ag economist John Michael Riley about the new report late Thursday morning. John Michael, how much smaller a U.S. corn crop are we looking at now maybe?
We're down about 70 million bushels compared to the last month's, the previous month's projection. That stems largely from a smaller national yield, right at 173.5 bushels an acre national yield. Mississippi's above that, 186. If we see that 186 come to fruition, that'll be a record for Mississippi. But nationally, you know, in the big picture, it's not that much smaller. But the market was looking for a little bit higher national yield, which would have pushed production higher. It went the other direction, and the market reacted accordingly.
What about consumption of corn for ethanol? I understand that changed a little bit.
That's right. It's up about 25 million bushels. Feed use was unchanged, but there is a little bit of expansion there, largely due to smaller petroleum prices. That then invigorates the ethanol market.
Now, as far as soybeans, what kind of change, or did we see any change in this report?
A higher yield, national yield, which pushed production up about 30 million bushels. Most of that was taken off the market, if you will, in consumption with both higher crushings and higher exports. Those pretty much offset each other, so ending stock pretty much left unchanged for soybeans.
So we're still kind of see this challenge between exports and crushing. That's still going on, really.
That is definitely going on, and some of those crushings are exported as well. But the global scene for soybeans are still vibrant due to mostly livestock consumption overseas. But that is pretty vibrant. Mississippi expected to get a record yield at 52 bushels an acre. So Mississippi's looking pretty good compared to national level.
And one more question back to corn. Is part of the problem there maybe the change was made a smaller crop because of storage issues?
I think we are seeing more on-farm storage. We usually have a good read of what the crop looks like, but that might not be the case this year with on-farm storage.
Many agricultural economists term the November report as mostly neutral as far as the cotton crop. Don Shirley of Georgia says the top appears to be firm with no new economic news to push prices higher. A strengthening dollar is certainly not helping cotton prices this week. The November 10th crop report did reduce estimated cotton yield in Mississippi by 11 pounds per acre. Our trivia quiz pertains to livestock, which will be coming up next in the markets. Here is the quiz question. The U.S. is the world's largest beef producer. What country is number 2? Is the answer A, Australia, B, Brazil, C, Mexico, or D, Argentina? I'll tell you at the end of the markets. As of midday Thursday, there seemed to be positive momentum in feeder cattle, according to DTN's John Harrington. However, the firming trend this week in the corn trade may be checking a little of the bullish enthusiasm. Analyst Mark Gold reminds feeder cattle producers they need to remember to protect the downside, even in what appear to be good times.
As long as the economy stays good, stock market stays good, the cattle market should stay good. And could we make new highs in these feeders? I suppose we can. As a risk manager, I don't know if feeders are going to go to 280 or 300 or whether they're going back to 160. I do know that it's an opportunity to spend $4 to $5 a hundred to protect an enormous risk in case, for whatever reason, this cattle market moves south.
The United States remains on the sidelines in what has become the fastest growing market in the world for imported beef. Efforts to regain access to China are said to be progressing, but a reopening of that market to the U.S. is not imminent, according to the U.S. Meat Export Federation. China, as you recall, stopped importing U.S. beef in December 2003. Before our feature story, let's check the trivia answer for this week. The correct choice is B. Brazil is the world's second largest producer of beef.